Good morning and thank you. I'm Vaishnavi Vaiti on behalf of Atmel Strategic Advisors. I welcome you all to the H1 FY26 earnings conference call of Fabtech Technologies Cleanrooms Limited. As a reminder, all participants' line will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please raise your hand or drop your questions in the chat box. Today, we are joined by Mr. Asif Khan, Director and Chairperson, Mr. Anup Munshi, CEO, Mr. Sajjan Kumar Bauri, CFO, Mr. Amar Abrar, Sales Head, Mr. Rajesh Gupta, Director, Art Integrated Projects Private Limited, and Mr. Ravindra Shetty, Director at Kelvin Air Conditioning Ventilation Systems Private Limited, who will share insights on the company's performance, key operational highlights, and strategic outlook. With this, now I hand over the call to Asif, sir. Over to you, sir. Thank you.
Everyone, good morning and thank you very much for joining us today. I hope my voice is clear now, ma'am.
Yes, sir.
So as we had shared during our roadshows and our previous earnings call, this year is turning out to just what we had said, an inflection year, a year where we are consciously prioritizing growth and reference creation, a year where we are choosing business decisions over short-term commercial considerations, a year where we are taking all the actions to build strong references across sectors to lay our foundation to build long-term value. Our goal is clear: to build a strong, solid company, clean room company with depth, solid fundamentals, and credibility across sectors. I'm happy to share that many of our planned milestones have been achieved ahead of schedule. In this half year, we closed two major projects: Sangam Solar of Wari Group, which is already being regarded as the gold standard in the solar industry, and this has given your company an entry into all major solar companies across India. This has also led to another win with Gupin Solar, and there are many other projects, inquiries and leads which have turned hot due to these two wins. Our data center business is gaining strong traction. Nextra NSE project have opened doors for multi-site opportunities. We have finalized Control S and getting repeat businesses from existing references. Our semi-turnkey pharma integration model, if you remember the upstream and the downstream that we were talking about at the roadshows, this sector has created powerful references, including Anthem Life Sciences, Softech, Geltech, and now Cytech Life Sciences. Let me share some important insights on what we achieved, the challenges we faced, and how we turned things around. We knew that building references would require tough calls, and we took those decisions. What we did not expect was the nature of challenges that came our way. In the first quarter, till the mid of second quarter, strangely, we lost one by one some prominent big ticket projects. The pattern was similar. The losses were over marginal price difference. A staggering 208 crores of business was lost. Some important big tickets were lost. I'm sure all of you know that we have EY doing regular forensic audits for us. A deep dive in these incidents highlighted a moonlighting problem. We acted immediately. 2 employees were terminated, internal structures were changed, and controls were tightened. And then came the turnaround. In the last 45 days of second quarter, we have closed 110 crores worth of projects, reflecting clients' confidence in your company. I'm pleased to report that FTCL, your company, is now being viewed as the fourth emerging power in the non-pharma space, traditionally dominated by major Japanese companies and Chinese imports. Earlier, we had guided that big ticket projects would come next year, but we have secured them this year itself. We, like others, also faced issues due to extended rains, severe labor shortages, and as you know, the same labor pool is catering to every single company in India, and India is bursting at seams. But we have cracked this labor shortage issue. For reasons of confidentiality, I will refrain from specifying those actions, but we have cracked this. And the last problem was some delayed pharma projects due to the tariff war. Despite all of this hitting at the same time, we have largely stayed on track, I must say. Now let's dissect the financial performance. On the surface of it, the numbers seem subdued. But if you see, FTCL standalone revenue stands at 50 crores, which was 57 crores last year. Standalone profit 2.9 crores. Last year was 5.1. This includes, important thing to note, this includes 1.6 crores worth of one-time spends on mock-ups, lab demos, samples, market visibility creation, seminars, sponsorships, all aimed at building strong sector promotion and visibility. Kelvin, our subsidiary, clocked a 26 crore revenue with 1.62 crore profit after tax. Many of the revenues have been captured, but the billing will be ensuing in the third and the fourth quarter. Kelvin has an order position of 40 crores with strong hot leads. Few solar projects Kelvin is in talks with and advanced stages. There are three major names here. I would not want to name them till they are finalized for reasons of confidentiality. Kelvin has closed the IIT Science block, and some critical pharma turnkey projects are also in the pipeline, which we should be closing in this quarter. It's on track for an 80 crore full year revenue achievement that we had envisaged, and when we had budgeted, we had projected. Our investment in art, 28% investment in art, has proven extremely valuable. Art, led by Rajesh Gupta, and he'll tell you more about art and what art brings on the table. Art, led by Rajesh Gupta, has worked as a design partner with global leaders like Excite, Kinetics Germany, giving us a technical edge that we wanted, especially for semicon and solar cleanroom design. With Kelvin for scale, art for high-end engineering, and our FTCL's manufacturing strength, we have now the firepower for large and complex projects. Our consolidated order book stands at 168 crores. It's a balanced mix of 50-50 between pharma and non-pharma. We have a strong pipeline of 800 crores active leads, out of which 225 crores are very hot. Both art and FTCL have invested in dies and tooling required for making import substitute T-grids in-house. Backed by art's design and FTCL's manufacturing experience. For your information, all T-grids used by the industry, the semicons, the electronics, the solar, were imported till now. Art has secured a 20 crore order for a solar company for this import substitute product, validating our Made in India strategy. We have made We know that we are competing with the Japanese, we are competing with Chinese imports, and we realize that we have to make a presentation to the ministries for the PLI qualification, which the industry enjoys, but suppliers like us haven't yet so far. And we met officials in various ministries and were pleasantly surprised by young, dynamic, energetic officials, which were very welcoming. They were, in fact, going out of their way, brainstorming on ideas as to how to make our offerings better. And this is a new glimpse of India, a glimpse of new India that we saw. We expect a positive outcome very soon. Kelvin is exploring process cooling and energy efficient systems for data centers for its high precision HVAC. Our alliance with KP Group will help address the rising energy needs of the sector. While everything is moving as planned, Advantech and Altair are moving slower than expected. We are not perturbed. Our earlier investments have taken time to perform. It's not Greek and Latin, but business is a game of probability. Our investments have taken time to take off, exciting and challenging, of course, but they have taken off. And we have a plan A, B, and C for unlocking value in Advantech and Altair and bring those partnerships back on track. Our numbers have dented due to unfortunate non-performance of Altair. Coming back to FTCL, seeing the rising demand in the capacity for modular panels, we have preempted and ordered 2 roll forming machines and 1 automatic panel assembly line. The 2 roll formers have come. The panel assembly line will come in the first quarter of next year. The road ahead for FY26 and beyond, our focus will be on strengthening our strategic alliances, expanding in-house manufacturing for import substitutes. I hope to get PLIs by then, and scaling our product to project ecosystem through Kelvin and Art. Momentum is strong, team is energized, and we are preparing for robust years ahead. We are building FTCL as a company of depth, capability, and reliability, positioned for long-term leadership. Thank you, ladies and gentlemen.
Thank you, Asit sir.
Was it clear, ma'am?
Yes, sir. Shall we start with the presentation?
Yeah, go ahead. Yeah.
Okay.
Yeah, we can see the presentation.
So can we start?
Yes, start, but you'll have to keep clicking ahead.
Yes. Just tell me next and I'll change the slides.
Yeah, so most of the times we have been posing a minute. Put that off. Yes. Can we? I hope I'm clear now. So
yes, sir.
This question has been posed to us many a times as to what is the difference between the 2 listed entities of Fabtech. Fabtech Cleanroom, as you see on the right-hand side, is an India-focused cleanroom infrastructure company, sector agnostic, life sciences, green energy, data centers, semicons, high-tech sectors. The ticker code is FabClean, and this is India-centric company listed on SME. On the left-hand side, you will see Fabtech International, which is focused globally and only in the life sciences sector. While Fabtech Cleanroom is focusing on air, that is clean rooms, Fabtech International focuses internationally on turnkey pharmaceutical, biotech, life sciences projects. And you see there the companies under international fold, and the ticker code is Fabtech. So that's the clarification that I thought we should be offering, because there's a lot of questions which had come forth on this subject. Ma'am, can you go ahead with the next slide? All right, this is the Fabtech Cleanroom, the company now that we're speaking of. Fabtech Cleanroom is in the business of setting up turnkey or semi-turnkey clean rooms for modular partitions And with the acquisition of Kelvin, with the investment in Kelvin, we have started integrating HVAC systems. We have Altair, which is a factory for producing eco partitions for various contractors. Advantech, where we have a 26% stake manufacturing air handling units. And the latest addition, Art, which brings a very solid technical acumen for solar and semicon clean rooms. This is the universe of Fabtech clean rooms. Next slide, please. Now, this gives you the structure. As I mentioned, we hold 51% in Kelvin, offering all kinds of HVAC solutions upstream of a clean room and rolling out our strategy in the non-pharma segment. In Advantech, we hold 26% manufacturers of air handling units, and we hold 80% in Altair. Both of these companies are managed by Abhijit Benkale. Art, the founder promoter Rajesh is here. Rajesh, if you can give us the flavor of Art and Rajesh Gupta yourself.
Okay. Good morning, everyone. So I'm Rajesh Gupte. I'm Managing Director at Art Integrated Projects Private Limited, which is currently part of Fabtech universe, as Asif just mentioned. So about myself, I am a mechanical engineer from Mumbai University from 1992 and hold master's degree in international project management from Stuttgart, Germany. So I began my career in HVAC with one of India's leading companies and got an opportunity to work on challenging projects from beginning in biopharma, some research labs, got an opportunity to work with DAE, also Department of Atomic Energy, helped designing India's initial first biosafety labs, BSL-3 labs, and driven with my interest in computer-aided engineering from beginning, I was asked to head the implementation of CAE division at the leading HVAC company in India, and that was first of its kind in India. We did it in 1990s, early 1990s. My journey in semiconductor and photovoltaic or non-pharma clean room started in 2000 when M&W Zander, that time leading advanced technical facility company from Germany, selected me for their HVAC clean room and computer-aided engineering, CAE we call it, role for English language projects. They had the expertise, but the expertise was limited to Germany. And when they started booking English language projects, they needed expertise who will understand the specifications in English. So that's how I was selected. And along with the designing of process exhaust initially, contamination control system where clean room is a part of it, and various utilities. So I'll just briefly run through what semiconductor industry needs. So they use a lot of different water systems, like process cooling water, ultra pure water. They use a lot of gases and chemicals. So around 30 odd different gases, bulk gases, specialty gases, chemicals. There'll be acid, caustic, solvent. Now, because there are acid, caustic, solvent chemicals, there'll be different exhaust systems also. So, and because there are chemicals, there'll be wastewater. That means wastewater treatment. So it becomes a very complex facility. One of world's complex facilities are semiconductor industries. And more importantly, there is a AMHS system, automated material handling system. So these systems carry the wafers from one tool to another during their manufacturing process. Because of my understanding of computer engineering, I was chosen, and to implement all this system, you need a strong space management or multidiscipline coordination. So In the initial years, I supported all the faculties, and I was selected to implement the multidiscipline coordination software, which was developed by a Dutch software company. So I along with another German colleague were in charge to help develop and implement M&W's 5D beam system. 5D is 5-dimensional, so three-dimensional as we usually know, but then we added intelligence to it, and it was real-time design, so you could see what is going on. So lot of sort of a virtual world we created. So this enabled us faster and more accurate space management, lot of uh, time saving, and obviously saving in cost also. So this was implemented first time by us in the semiconductor fabs. So in 2004, two colleagues and I founded AR Technologies GmbH in Germany. So Arthur, Alexander, and Rajesh. So that initials comes to AR Technologies to provide high-end design engineering services. In 2005, to support our German operations, I started Art India, and eventually all engineering deliveries were shifted to India. Only the coordination remained in Germany. We executed prestigious projects. Can't name all of them due to confidentiality agreements with them, but to name a few: King Abdullah University of Science and Technology, when they built $16 billion university, they spent around hundreds of millions dollars of labs. So I was the design lead for that lab on behalf of Kinetics Germany. Kinetics is high purity gases and utilities systems world leader, and I was their India operation head also. My peers from M&W, early M&W days, are now CEOs and MDs of major German engineering companies, and they continue to engage us for specialized engineering support. This also keeps us aligned with global best practices. When I say us, is Rajesh Gupta also and Art also, because this industry is changing so fast. Every now and then they'll come up with new technology, and you have to be abreast with the technology. And keeping involved with this large scale international project gives us that edge for Indian projects also. So from 2018 till recently, July 2025, I also worked as a design lead for Cleanroom package for Excite Germany for 6 to 7 of their semiconductor fabs worldwide, 4 in US, 1 in Ireland, 1 in Israel. So, however, with growing scope of Fabtech and art, I have now stepped away from that role and have decided to focus fully on building a strong microelectronics engineering foundation for Fabtech and art in India and abroad. I hope that gives a little bit of understanding of my role and Art's role in the whole Fabtech universe. Thank you, ladies and gentlemen. I'll hand it over to us.
Thank you, Rajesh. Thank you so much. It was very helpful, and I'm sure there'll be lots of questions which will be ensuing now. So, ladies and gentlemen, this is the rationale of acquisitions and investments that we have done. And as I mentioned, Kelvin brings micro precision HVAC and scale. And you have heard from Rajesh what Art brings on the table for Fabtech. And together we have a lethal gunpowder to take over the mighties in the industry. And this combination and the philosophy of product expansion, market expansion, and consolidation, and with the entire ecosystem now getting close to complete. In fact, we have 2 more steps to be taken going forward. So this gives us access to technical capability. This positions us a lot better and helps us consolidate in the industry, which is so technically oriented. And it helps us synergize better and gives us a lot of opportunity for cross-selling also. Next slide, ma'am. That's the the key milestones of Fabtech that you have already learned over a period of time, I guess. So in terms of the product offering, you have heard me specify the capacity expansions. We have FM Global certification, which we obtained in the year 2022. That helps us really take on the international competition in a very beautiful manner. Next slide, ma'am. This is a very small a slide which explains why you need a clean room. So give you a flavor, clean room is control of temperature, humidity, particulate matter, and microorganisms. And as India aspires to go global, as our promoters lay stress on productivity, as high-tech production systems and processes come into play, clean room contamination control, humidity control is here to stay, and it is exploding at seams with a lot of investments coming in electronics, in semiconductors, in solar, and virtually everything. Now you see a lens manufacturing company using clean rooms. You see a diaper and sanitary napkin producer using clean rooms, a biscuit manufacturer using clean rooms, a bottle, empty bottle manufacturer using clean rooms. It's a market which is exploding at seams. I would hesitate to keep a ceiling there, keep a number there, but we are getting inspired constantly by interacting with a lot of you investors who keep motivating us, who keep challenging us, who keep helping us increase our bars. And we have been adding to our image, to our production capacity, to our promotional campaigns in the entire flavor. And we aspire to become India's one of the formidable players in the clean room sector in India, in data centers, in semicons, in solar, adding energy and cooling novelties in our systems, becoming a high-tech player, and just positioning us there in order to attract after these reference creation phase is complete. We see already a heavy influx of leads. All that we have to do is keep our execution capability strong, keep ourselves, improve our appetite to take on that growth. And so we have a large, beautiful factory in Umbergaon. Many of your investors have visited there, producing modular clean room panels that you see in the pictures here. The sharp, the covings, the suspended false ceilings, the inert nitrogen-filled view panels, and on the extreme right top, you see the HVAC system, the upstream of above the false ceiling, which Kelvin brings on the table. And there you see the air handling unit, the heart of the HVAC, which is produced by Advantech. So here you have a company which is good, very nice. Thank you so much. This is beautiful. So you have a company manufacturing clean room panels ourselves, doing heating, ventilation, air conditioning ourselves. The number 3 picture that you see is the T-grid, the import substitute that I was talking to you about. Extremely critical. With the help of Art and Rajesh, both of us have developed dies to manufacture this, and we have started making breakthroughs. The 4th picture is air handling unit, which Advantech is doing. Currently, we are unable to buy all our air handling units from Advantech because of the Eurovent certification, which is pending, which will take about a year's time. And the last one is the MEP. This is the last pin in the whole block that we wish to add. And going forward, you will see us taking all of these on a turnkey. Next, please. Now that's a manufacturing facility, 100,000 square foot in Umbergaon. Then we have about 60,000 square foot in Murbad. You have a globally ready infrastructure to take on the explosion in the clean room market, Next, please. Now that's the market expansion I was talking to you about, from pharma, biotech, life sciences to non-pharma, which is much larger. You have the product expansion, then you have the downstream, that is modular partition, upstream, that is HVAC, manufacturing and handling units, and in future, MEPs and electricals, and consolidation. We have invested in beautiful companies and consolidating. And as I have been mentioning, we are fragmented. The industry needs consolidation. And there's a huge appetite, huge potential for consolidation in the industry. Yes, please. We have already spoken about this. So the market is huge. We have pharma, we have biotech, healthcare, where we are already present. Semicons, we have started rolling in. Electronics, automotives, data centers already started rolling in. Green energy, finalized. EV batteries is something which we yet to make a breakthrough in. And food and beverage is also flowing very nicely. Yes, please. Now that's the credibility. Very few companies have the project wherewithal, the project management strong team pan India, a strong manufacturing backbone. And hence, after this inflection year, where we are creating references, building teams, doing a strong promotion, we see ourselves taking off. That's the reference list in pharma and the non-pharma both. We have Schneider, we have Procter & Gamble, Godrej, Bosch for automotive, Cadbury's for food, Hindustan Aeronautics, Siemens, and Mercedes, Kelvin. And on the pharma side, you have Short. I was mentioning to you the container manufacturing, clean rooms for container manufacturing. That's Short class for you. Then you have Glenmark and Cipla's, which is a regular, Mankind, a regular, Anthem, a turnkey reference. We have not put Geltech here. We have not put a Softtech here. Then we have Reliance, a blood plasma fractionation, a regular one again. Next, please. That's the reference building which is going on. That's the addressable market. And you have huge investments coming in data centers. We are gearing up. References have started generating more leads. References have started giving us repeats. Solar, we have finalized 2, followed by Sangam Solar, that is Wari. Immediately we had Gupin. And right now, Rajesh and Ahmed are sitting, attending the call from a car, because right after this, they have another meeting, another very high profile, hopefully finalization soon. And then you have a life science sector. Of course, it is impacted a bit at the moment, but we have plans to increase our ticket size in the life science sector by some steps that we are going to take in the next 18 months. Yeah, go ahead, please. All right. So you have a very independent board led by Anup. In fact, I'm not day to day. I guide the team on the strategic level, and it's Anup, Munshi, Ahmed, Rajesh, Ravi, Prashant at the factory, led by a sound team there who are taking all the calls. And it is largely a very professionally driven company. Go ahead, please. This is Team Kelvin. Ravi is here with me, always shy to talk. And hence, yes, go ahead, please. That's Altair. We have Altair and Advantech going slow. And Altair, unfortunately, the results impacted the consolidated balance sheet. But as I said, some of our investments have taken time to take off. This will take off too. We have plan B under rolling, and very soon we will have plan B rolling out to unlock and to create and unlock value here. Yes, go ahead, please. That's the snapshot. I don't know if you want to add here.
No.
Yeah, we can. I mean, I suppose everyone has. Am I audible?
You go ahead. Meanwhile,
Yeah.
so you have shown volume growth here. You have seen revenue growth here. Okay. So hit. Sorry, that's okay. I'm okay. So Altair 70 lakh loss has taken a hit over here, and 1.6 crores of one-time exceptional expenses has taken a hit here. We are going after reference building, and as we mentioned, we are taking business decisions and not to create reference in the market. We have realized that in order to compete with the giants Japanese here, then we have to take business calls, which we have taken, and the results are encouraging. Yes, please. That's a lot of words.
Yeah. I suppose everyone must have gone through this by now. I mean, we've already filed it.
I think we'll take this up in the question answer, man.
Yes. We can move to the.
Team Macmill, we can start the Q&A.
Yes, sir. So thank you, Asif, sir, for the detailed presentation. We will now begin the question and answer session. Anyone who wishes to ask the question may raise your hand or drop your questions in the chat box. So we will wait for a moment while the question queue assembles. Asif, sir, am I audible?
You are audible.
Okay, so first question is from Mr. Deepak Poddar. Deepak, sir, you may go ahead and ask the question.
Yeah, I'm audible.
Yes, Deepak.
Yeah, hi. Thank you very much, sir, for this opportunity. So just first up, wanted to understand on the margin front, our first half, our margins has declined. I mean, we have been in the range of around 10.5%, excluding other income. So it was around 6.5%. So how should one look at margins going forward?
Well, this year, Deepak, as I mentioned, this is a reference creation year. When you create reference in a new industry, the clients draw their blood, and we are ready to give our blood. We are ready to give them the margin. We are ready to give that commercial calls to them. Whenever you create a reference, especially in big tickets, at that point of time, as we have done this year, and we knew this, and that's why if you see during our road shows and in the last earning calls, if you see, we have said this is an inflection year. This could hit margins, but you will see revenue growth. As we build references, then we can demand our flesh, our piece of pie, our margins here. When we create a reference, you see.
Understood. So you are expanding in your non-pharma segments, right? So there you are kind of quoting at lower prices so that you can get more business and kind of. That's what we are trying to do.
Right. That's right.
Okay. So I mean, in terms of margin, this first half margin of 6.5%, that is the reference we should take going forward, as of at least for this year.
Look, first of all, we are not a quarter-to-quarter business. Yeah, the third and fourth quarter are generally lopsided. We still are hopeful that there would be some revival in the pharma, and the tariff war would have gone. In the revival in the pharma, which will help us compensate the margin. So, to be honest with you, though we may not be hitting the 10%, but we will still reach to a respectable between. I would not want to quote a number, but it would still be respectable. We are taking all the steps to become frugal. We are already to
Mhm.
the first 6 months where a lot of promotions, you know, when you enter into an industry, there are things which we only took promotional campaigns in pharma. Now we sponsor the IIT Semix, right? Yeah,
Mhm.
Semix. We took a lot of clients international to see our large ticket projects, because though the parent company, international listed company, it has very large reference base, but not in India, internationally. So we took and we take still clients abroad, especially in the UAE, to see our big tickets, to tell them that we can do big tickets. If we can do big tickets in sensitive geographies, then India is heaven. So here,
Mhm.
as confidence builds, now our first project Wari was a business decision. The second project Gupin, uh, we are. I hope they're not listening, but we are making decent margins. So average. So
Mhm.
we will do good. We will do good.
Understood. Understood. And sir, that's pretty helpful. And now you mentioned that we are trying to take more projects and all, so that we can, and the opportunity size you mentioned is humongous. I mean, so what sort of growth CAGR we may look at if you have to see next 2, 3 years?
Okay. So the first 2 years, 30 to 40% is the growth that we are targeting. After 27, honestly, I would not be putting a ceiling at all.
Mhm. Okay. Okay. And in terms of order pipeline, you mentioned we have got around 800 crores of leads, out of which 225 crores are very hot type. So by year end, what sort of order book we are trying to get, FY26 end order book, and what is the general execution timeline of the order book?
Okay. So the pharma takes generally 6 to 8 months. The non-pharma is very, very quick. The non-pharma, they want things in 4 to 6 months.
Mhm.
Pharma is 6 to 9 months, and non-pharma is 4 to 6 months. And to address your question, I think we will be flowing in the next year with a very decent order position between 200 to 250 crores.
200 to 250 crores by March 26 is what we might be targeting. Would that be a fair assumption?
Yeah, going into the next year.
Okay.
Yes, March 26.
March 20. Okay, okay. I think, and just one last thing, our current, what is our current capacity utilization?
Current capacity utilization is around 60%. 60%.
Mm.
Now, there are people over here to answer this, but since I'm going with the flow, I'm taking this question. Yeah.
Sure, sure,
So
sure.
60%, but we have added, as I mentioned, we have added 2 roll forming lines. Now, the beautiful thing in that industry is that we have the infrastructure ready. So we have one roll forming line and our capacity goes up by 20, 30 crores. Another roll forming line, and we have another 20, 30 crores added. And we have a large automatic line added, which will be operational by the first quarter of next year. And that should give us a capacity addition of about 100, 120 crores.
Mhm.
So
And when will this come?
we are tripling our capacity, and our capacity utilization is 60% as of now. We are also
Okay,
putting
and
up a unit in Hyderabad.
when is this coming? This 120 crores you mentioned, capacity addition?
First quarter of next year.
1Q FY27. And
Yeah.
generally, whatever order we take, I mean, the turnkey project also we take, and a kind of execution or manufacturing also we do in-house. We don't source anything from outside. That would be a right understanding?
No, modular partition. See, if you have seen the slide, we have the downstream part. Downstream part, that's a modular partition which we manufacture in house, and then we have the upstream part above the false ceiling, right? Above the
Mm-hmm.
false ceiling, this is a project game. Most of
Mm-hmm.
the things are outsourced, so it doesn't really depend on the capacity. Here we have limitless capacities.
Okay.
Only how do we
Downstream we
execute?
have
How do
in-house.
we design? Sorry,
Downstream
I
we have
lost you.
in-house. Downstream we have in-house.
Yes, downstream we have in house. Correct.
Okay. Okay. I think that would be it from my side. I will allow others to please ask questions.
I think we have, we
That's
have,
very
we have, we
helpful.
have taken major questions already, so
Yeah. All the very best to you. Thank you so much.
Thank you, Deepak.
appreciate.
So the
Thank you.
next question is from Ruchi Sethia. Miss Ruchi, you can go ahead and ask the question.
Hello, hi, good morning. Thank you for this lovely presentation. I'm speaking from Vora Family Office, and my question was around we have competitors from China and Japan, right? So, how is Fabtech having a cost advantage there?
Well, that's exactly the reason, ma'am, why we said we'll take the margin hit, because we want to show the industry that we can deliver with a manufacturing facility, beautiful manufacturing facility here. We can deliver what they really want. With the certification in place, we can deliver what they want. And yes, and we are making the business decisions to penetrate the market, and we have taken the two large orders against the Chinese competition only. In fact, there have been clients who have said, uh, "We give you the some product from China. Will you install it for us?" And we denied. And that's the challenge where that's the reply to your question, that even when you have a slight cost advantage with the Chinese might be having, you still need the manufacture, the the installation, the execution, the finish that we can provide. Customers are expecting that from us, and this is not new. This happened in the pharma, and today we don't mention China in pharma at all, right? The same thing within about, let's say, a year or two, you will see our manufacturing getting ramped up so much that we will we will be a name to reckon with. And the cost advantage of Chinese with the PLI, if the PLI comes through the representations that we have already made, then I think we are at par.
Okay, okay, I got it. Okay, and there's one more question that I wanted to ask. Which by 2030, if we are seeing the business opportunity for clean rooms, I wanted to understand that how much capacity would Fabtech be able to grab there, and how are we going to be? Yeah.
We got to understand this very. See, 1 crore of downstream gives us 3 crores of upstream. That means 1 crore of modular partition gives you 3 crores of HVAC. Okay. Now, clean room is a hardware, is a upstream and downstream integrated approach. When you talk of capacities, we have a capacity, let's say, in the factory of about 400 crores. Okay. Now, 400 crores can give us at least about 1600 crores of HVAC. Right? If that answers your question, if I'm doing justice to your question.
Mainly understand if we have an 18 to 20 billion dollar opportunity, how much is our capacity there?
Oh, if you have, look, we as I had mentioned earlier, maybe last year somewhere, 25 to 30,000 crores the market size of clean rooms opening up till 2030, 31. So 5,000 crores every year. In 5,000 crores, we are not even addressing 5% of it. And going forward, we are gearing ourselves, we are increasing our appetite, we're increasing our stamina to take on at least 20% of this market, which is unfolding.
Okay. Okay. Thank you. Yeah, that answers my question.
Sure, thanks.
Next question is from Mr. Narayan Lodha.
Anup, you want to take it?
Narayan sir,
Please, the camera on. I see a raised hand, ma'am.
Next question is from Mr. Yash. Mr. Yash, please go ahead and ask the question.
Hello, am I audible?
Yes, yes.
Yeah, thank you for the great presentation, sir. So my question is again around the order book. So when we say that 800 crores of orders in the pipeline with 380 crores of hot orders, right, which are nearing completion in the final stages, and then we say that we'll enter FY27 with around 250 to 300 crores of order book. So how does that work? I mean, once we complete, say, 280 to 300 crores of closures, would we be executing some of it in FY26 itself? And from the remaining, say, 450 to 500 crores worth of orders, how many do we see converting into contracts?
Okay, so I'll just give you a little bit of correction here. We said 800 crores of hot leads with 225 crores which are in the final stages. Now 225 crores the final stages does not necessarily mean we'll convert those to 225, but also at the same time the 800 would from hot turn to very hot. Number one. Number two, we already have a order position of 160 crores. Okay, we have crossed about 77. 160, whatever we have in hand, plus in the next 6 months, we'll add 100 to 100 more. And we will be billing at least 50 to 60% of this. So I'm saying we expect conservatively to get into the new year with around 200 to 250 crores of order position. That's what I meant, Yash.
Understood, sir. Understood. And so with respect to upstream versus downstream, so when you say that, 1 crore of downstream will give you 3 crores of upstream, so
Yes.
even the margin in the upstream would be higher than the downstream. Is that correct?
The margin in the upstream would be higher than the downstream. No, margins are there in both. But what
Okay.
happens is generally in the reference creation mode, when you have
Mm-hmm.
to crush a competitor, and when you know the competitors have deep pockets in Japan, and when they're out to take your life, then you have to, and we preempted this. Nothing what we are doing thus far is not envisaged. We knew this would happen, and hence we had repeatedly said, this year is going to be an inflection point. जब reference creation हो जाएगा, आज क्या हो रहा है? Japanese, when they are coming against us, they come with a strong reference base in Japan. All right, worldwide.
Sure.
Now,
Correct.
when we are doing this, we have to show the Indian industry that we also can deliver a similar project. We also can, we have delivered internationally, so we can also deliver. तो वहां पर customer को हमने थोड़ा margin cut देना होता है to
Correct.
qualify.
Correct.
You got my point? And that is
Yeah.
exactly what is happening. This is a reference building phase.
Correct. So,
I
so
hope
my
I've not
point.
missed your question.
No, no. So, sir, actually, my question, I was coming from the point that if 1 crore of downstream gives us more of the upstream uh, contract, so would we are we thinking on further acquisition of stake in Kelvin?
Yes, Kelvin has been given a target. The moment they touch 7 crore ka PAT, yes, we will be triggering the next 51 to 76%.
Perfect.
And by the way,
Perfect. Thank
Ravi
you
is
so
here.
much, sir. Hi, sir. Thank you. Thank you. Perfect, sir. Thank you. That's it from my side.
Thank you. The next question is from Mr. Vijay Rawat. Mr. Vijay, you can go ahead and ask the question.
Mr. Vijay, hi. Some
Mr.
glitch
Vijay,
there
just
with the.
checking. We can't hear you.
Some challenge, man.
So we'll move forward to the next question.
Mr. Vijay can type it. We can take it, yes?
Yes, Vijay sir, if you're not able to speak, you can just type your question in the chat box. In the meanwhile, Mr. Parth, you can go ahead.
Hello, sir, am I audible?
Yes, Parth.
Yes, sir. Thank you for the great presentation. Actually, I had one question that we have 166 crore orders in hand, and since they are executable in this calendar year, can we achieve a 225 to 250 crore top line in FY26?
Yes, Parth. Yeah. It is pretty much doable. It is pretty much doable.
Okay, thank you, sir, and best of luck.
Thank you so much. All the best.
Thank you. Next question, please. Investors, you can raise your hand or drop your questions in the chat box.
Chat box पे है questions. I can't see, huh?
Investors, I request you to raise your hands or drop your questions in the chat box.
Okay, the question is, ma'am, can I take the question? here, I can read it.
Yes.
There's some technical issue at his end. I can't see the name, unfortunately, but can you please explain the work that needs to be executed in renewable? So in the renewable energy segment, both the projects that we have got at the modular partition, the downstream.
Mr. Narayan, I hope your question was answered. Mr. Vijay is not able to unmute.
Any specific guidance for FY27? FY27, yes, as I said, these 2 years we're expecting a 30 to 40% growth year on year. And after 27, then again, repeat, we're not putting any ceiling. Ma'am, go ahead. If there are any other questions,
Yes, Mr.
there are.
Sunil, you can go ahead and ask the question.
Hello.
Yes, if there's a question here, we'll address it after you finish it. Yes.
Hello. Am I audible?
Yes, please.
See, how are you, sir? I am Sudhir Beda from Beda
Sir,
family
how are you?
office.
Namaskar.
Namaskar.
How are you?
So I just missed that number. 26th का आपने जब बताया what is the likely turnover for FY26? I could not listen to that number. And the margin guidance, if you can give for 26 and 27, how margin will look like as we move towards the value-added products. So.
Yes, so Sudhir, namaskar. I hope you're good. So we have been repeatedly mentioning that this is an inflection point where reference creation is happening, where we are focusing on revenue, even if we have to compromise on the margin a bit. Once the reference creation is done, then we will be able to command premium on our offerings. Number one. Number two, coming to a specific question, we have already done 77 with subdued margins because of the one-time expenses that we have done on promotions, on mock-ups, on prototypes, on samples, on visits, on a lot of development work that went in the company, the image creation, the something which is not done once a reference is built. So that's the second thing. Third thing is, yes, we should be easily looking at achieving 225 to 250 revenue, and we are looking at a 40% year-on-year growth. Margin compression is essentially, as I mentioned, due to, again, there's a question which I'm taking together. Margin compression is essentially due to reference creation, and this is not something of a revelation. This we knew from the day one when we went into the IPO that we are preparing ourselves for takeoff, and for preparing the takeoff, this year is an inflection period where reference creation will happen, right? And FY27, 40% year on year, you can take it very safely.
Yeah, very impressive, sir. Very impressive. Yes.
Thank you.
And thanks for the opportunity.
आपका question मैं भूल गया.
No, question वही था कि this year turnover and the margin. So yeah, first H1 margin we understand it is because of prototype and all pre-operative expenses that you have incurred. But then going forward, what could be the normalized margin we can see second half and next year?
The second half, as I said, we will be between honestly speaking, 7 to 8% is this year special margin that we are expecting, and next year onward it should get normalized when the reference creation is in position, where our capacities have been added and volumes bring in more growth. We walked in. There are questions. There are statements which I should be giving here, because कंपटीशन भी सुन रहे होंगे, क्लाइंट भी सुन रहे होंगे. हमने बहुत कंप्रेस मार्जिन में वारी लिया था, लेकिन हमने बहुत अच्छे से उसको हैंडल किया है.
So 7 to 8% EBITDA margin you are talking, or
नहीं,
PAT margin?
8% PAT margin.
Oh, great. So thanks very much, sir, and all the best. for the
Sir,
future
game of
growth.
probability है, game of probability है. We are building a very beautiful long-term basis पे, strong fundamentals पे, a company which you will be proud of, which India will be proud of. There is a huge runway. There is a lot of business, but buffet है, लेकिन आप अभी फिलहाल एपेटाइट बनाओगे और सेमिना बनाते बनाते खाना शुरू करोगे. अभी से आपको खाना अभी से if you take on everything, it will be not healthy. So we are going our way systematic, but 2030 is something where we are holding a lot of internal meetings between all the companies where we should be. Don't ask us what we will be on in 2030 because next आपका question यही होगा. लेकिन we are aiming at very
नहीं,
beautiful,
sir.
something very different.
We have full faith in your capabilities, your and your team's capability, and I think you will deliver more than what you are saying. So
Ashur, God
all
bless.
the
Thank you
best.
so much.
Thank you very much. Yeah, thank you.
Thank you so much. Thank you so much. God bless.
Thank you, Sudhir.
Yes, sir. Vijay here. Am I audible?
Yes, sir.
Yes, Vijay, you are audible.
Yeah. So my question is, sir, any plans to enter African market? And if yes, what are the challenges in those markets?
Currently, India is having so much of potential that turning our attention somewhere else will not be very healthy. However, having said that, we have the international company FTL Fabtech, which is already operating globally, already operating in the international market. और वो जब कोई भी नॉन फार्मा जॉब्स लेते हैं, तो of course there are chances of we, FTCL and Kelvin, getting that business. वैसे इंटरनेशनल कंपनी अफ्रीका में बहुत सालों से, हमारी इंटरनेशनल कंपनी बहुत सालों से इंटरनेशनल में ऑपरेट कर रही है, एंड all sensitive geographies we are operating, sir.
Okay. And
But
how
not
much
this
turnover?
company, because this is a focus company in India centric. It's an India centric company focused only on the India business and non-pharma also.
Okay. And so what about this semiconductor opportunity in next 2-3 years? How much rollout we can see? We know for 8 to 10 years, it is very high potential. But in the short term, how much rollout we can see in 2-3 years? What is the market potential for clean rooms and the company like us?
So semiconductor, I will not be able to tell you because semiconductor largely is government subsidized and promoters in India have a small skin in the game. But I see solar, I see data centers, I see electronics, I see other industries like food, beverage, plastic disposables, medical disposables, sutures, lenses, hair dyes, everything else exploding. Okay.
Okay, fine, sir. Thank you so much.
There is other question. You mentioned raising stating Kelvin. What about other entities? Yes, there is. That's also in the card, but there are certain bench. What do you call it? Milestones. Certain milestones that we have kept for every entity, and yes, we will be ensuring that the promoter of the companies that we are investing in are getting enough money to grow. They then second tranche, they get enough money to secure themselves and their homes so that they can fly together with us and soar with us. ये मैं क्वेश्चन जो पढ़ रहा हूँ वो ले रहा हूँ. Since you're looking at 40% year on year for the near future, how are we planning to fund the growth? We have largely the working capital unutilized, right, Sajjanji? Yes. Working capital unutilized. We have preempted and applied for a 15 crore ka. Already we have got the sanction of 15 crores. We have always so far since our inception preempted and kept ourselves ready for the next cycle of growth. So currently our working capital is not utilized, and still we have applied for a new limit. And if the growth is like when we realize that there is tremendous appetite for modular partitions, we went ahead and ordered 3 lines, 2 roll forming, 1 automatic line. Okay, this was not on the cards, but when we saw the demand coming in, we prepared for it. And people have come here, clients have come to our factory, approved the technique, approved us technically, approved us commercially. एक image की कमी थी जो public issue ने हमारी वो image पूरी कर दी. Now we can always say we are like the Japanese and matching their financial depth, pockets, and wherewithal to deliver even big ticket projects. So ये है explain.
Kindly explain your working capital cycle along with
Yeah,
present
kindly explain your
numbers.
working capital cycle along with present numbers and what we can expect moving forward. So, Sachin, do you want to take it?
Yeah. So at present, we are having the banking limits with our bankers of rupees 22 crore. In that limits, maximum we have not utilized till current half year ended 30th September 2025. In spite of that, we have got the sanction from our banker for enhancement of limit of further 15 crore. We have got the sanction from our current bankers. So our limit is around 32 crore to 35 crore. Please note that our working capital cycle that includes our debtors that also within control, debtors control, and then in this current period, half year, we have built the inventory actually. So definitely you can say 3 to 4 months capital, working capital we are required and we have managed for that actually.
Yeah, there's one more. Trade receivables only. The second one, the next question. Trade receivables are on the higher side for March 25. It was 53. Currently, it is exposed increase to 65 crores. Yeah, so this year, your trade receivables could go up a bit, as we said. Yeah.
Yes, you are absolutely right that trade receivable are on the higher side for March 25. It was 53 and currently it has increased to 65 crore. Yeah, on consolidated basis, if you are seeing our sundry creditors has increased from 53 to 65 actually. And if you are going in standalone basis, we have managed to bring down the debtors from 50 crore to 47 crore in current half year. But our target is to reduce the trade receivable by the year end within 3 months of our total turnover. We are working very hard for collection side and our efficient team is taking care of the same actually.
Sir, I guess we have covered the questions from the chat.
Yeah, so I have a question. I wanted to ask about the payment cycle. Like, what stages do we receive the payment? Do we get some advance, and how is it, sir?
Yeah. Whenever we get the order projects, so normally we get 20 to 30% as an advance against the bank guarantee. And then whenever we means running bills, we issue the running bills to the party stages by. So definitely we are raising the bills to the party.
So we have 2025, we have 60
days, around 30 days is the realization period. And rest of the 10% that is kept by the party as a retention money against the performance bank guarantee
commission.
and
Fine.
commission.
So,
of the
yeah,
project.
you were saying 20-30% advance, then remaining 60% after giving the submitting the bill, and 10% is retention, right?
Right.
Broadly. Sir. Okay, fine. Thank you. Thank you.
We have one more question from Mr. Narayana.
You have this?
Share
Can you
revenue
please
bifurcation
revenue
from-
bifurcation ready here with us?
Basically, sir, we have only one business segment actually. So
No. I think where he's coming from is pharma and non-pharma. So currently, unfortunately, I don't know your name, gentlemen, but currently we have the entire revenue 6 months come from mostly pharma, number one. And in this 50 crores is pharma. Sorry, 50 crores is pharma and 26 crores is Kelvin. And that is data centers and a semicon project and solar. So to answer your question, 57, 50, 25, 67% pharma and 33% non-pharma. There it is. No, that's the order book position.
Asif sir, I guess we have covered majority of the questions, so we can conclude the call.
Yeah, thank you so much, gentlemen, everybody. Anup, you want to final parting
Thank you
remark
so
from
much.
Anup, please?
Yeah,
Anup, here it is. This is, you want this?
no, I'll take this. Can you hear me?
Yes, sir.
Can you hear me?
Yes, Anup.
Yeah, okay. So, yeah, I hope all the questions have been covered because we had a very broad spectrum of questions coming up from our investors. So, first of all, I would like to thank all the investors for joining us today. It's heartening to see so many people joining and asking such questions, which makes us feel that you all are interested in knowing more about your company. I would like to thank you. Just in summing up, maybe I would like quickly to say that one, as Mr. Asif already explained to you, that this was an inflection point year for us, where we were establishing our credibility in a different sector, which also leads me to a question which is a little more marketing oriented, that we are looking at two aspects of our markets. We're looking at one, the penetration. That means the existing market. There's a lot of market existing in the market. So we need to penetrate, which for, as he told you, we need to look at the pricing there. We need to look at the promotion there. We need to look at the distribution there, logistics. So those are areas we are really beefing up, in the next, say, year and a half. The other thing is market development. As again, he told you, and Mr. Rajesh told you, and Mr. Shetty told you, we are getting into different sectors. So our market is expanding substantially. So the marketing mantra right now we are following is market penetration and market development, both along with product development. And for that, we are beefing up our capacities. As I mentioned to you, we are setting up another unit in Hyderabad, which will be probably function by March next year, which is another area that we're working on. One more area we're working on is the people. Yeah, we have recruited a lot of technical people. We are working a lot on the technology, changing the manufacturing processes, methods to improve our skill based. Now we are also looking at value engineering, which will give us better costing for the future, because going forward, margins will always be, when you look at a expanding market. So our costs, we are looking at that. So therefore, that's another area, value engineering, R&D, development, which Mr. Asif mentioned to you, one-time expenditures in developing. Another interesting thing we are doing is in industry academia interface. Like he mentioned to you about CEMIX, we're trying to develop certificate programs for people, which we will conduct at our factories along with the IIT. We are working on that. That should be coming up. So that's the other thing. And of course, as he also mentioned to you, Kelvin and Art and Advantek Altair, all of them together, the universe that we have created, we are going ahead with a great amount of confidence. We are very confident that we're going to maintain that 30 to 40% growth rate for quite a few years going forward, and shall definitely establish our presence in as a sector agnostic clean room provider. And thank you very much again. Thank you all of you to attend this conference, and please be assured that this is like the Women's World Cup. Some of you if you had looked at the Women's World Cup after the third or fourth match, everyone had given up hope that we are nowhere. And then two more matches and then we are champions. So look forward to March 26 and March 27. Believe me, that's what we will do. Thank you very much.
Thank you. And
Thank you very
Asif
much,
for
everybody.
providing valuable insights and guidance. And thank you to all the participants for joining on the behalf of